Good morning, it's Steve and Jamie from Signal Centre. Today is the 7th of June, Turnaround Tuesday, we've labelled this. We feel like we're a bit ahead of ourselves yesterday in calling our gun-to-head trade ideas. We've seen a bit of a turnaround yesterday afternoon in the indices. We're going to dive into that in a minute. How are you doing, Jamie?
Yeah, not too bad, thanks. Got a nice sunny day here, so that always lifts the spirits a bit. So I'm ready to get
Does
stuck
it? It
into
looks
some charts.
really nice outside your
Yeah,
office.
I'm in my penthouse right now. This is one of my 5 houses. Just living the dream.
Yeah, it's amazing how well you've been doing. Well done. We're going to dive into the latest headlines. US yields dominate global markets. We've pushed back above the 3% level in the 10-year. This is the first time in 4 weeks. Further selling resulted in the move extending to 3.05%. Almost looks it worth investing in. The feeble Bank of Japan protests in comments on Tuesday. Bank of Japan Governor Kuroda stated that a weak yen is beneficial for the economy if the moves are not too sharp, and that now is not the time for an exit strategy. The yen slid to fresh 20-year lows. The increase in US yields was an important factor undermining the Japanese currency on Monday, with the dollar yen moving above the 132 level. We'll take a look at that also on the charts. After the Kuroda comments, dollar yen posted fresh 20-year highs near 133, with the euro at 7-year highs close to 142. RBA hiked 50 basis points, was slightly more than was expected. Consensus was going for a rise to 0.6%. They actually moved it to 0.85%. RBA also stated that there will be further increases over the next few months. According to the bank, inflation will increase further in the short term. No sugar, Sherlock, but return to a 2 to 3 range percent next year. Very optimistic, I think.
Okay.
Johnson survived a confidence challenge. Prime Minister Johnson won the Conservative Party confidence votes with 211 votes. Opposition was, however, stronger than expected, with 148 votes against. Almost hit the goalpost, I think, with that. Markets had hoped that the vote would be decisive, and there will be further uncertainty in the short term, with sterling losing ground. So let's dive into the markets, and I'm going to start with indices. We'll take a look at how price action has been in the DAX first. We are in this bottoming formation, although it looks like we are stalling around about the real resistance level. Resistance all the way up, in my eyes, to 15,000. We stalled yesterday at around 14,710 before reversing quite sharply in the afternoon. Nasdaq also similar sorts of price action. We saw that the price move up towards this resistance level that we drew in from last week, around about the 13,000 level, but then sold off in the afternoon, forming a bit of a shooting star type candle. So that's pretty negative. We've still got the 21-day moving average just below here at 12,300, but under pressure really at 12,500. A little bit, if we go down to the really short-term charts, we can see how important this level is. 1, 2, 3, 4, 5th time we're really testing it, and it looks like a pretty decent effort, although that's my gun-to-head trade from yesterday. That wasn't too good. Never mind. Jumping into cryptos, and we can take a look at, we thought there was going to be a bit of a recovery yesterday, but it failed quite miserably. Didn't take out the previous swing high, stalled in front of it, and reversed very sharply on the Bitcoin side of things. So we continue in this sideways trend, which we've seen since about the 11th or 12th of May. And again, looks on the back foot for me. Ethereum also around about that supportive level. This support level goes all the way back, remember, to this time last year, May last year. We saw this level hit 1730 on the charts, and we've retested a couple of times, looking for a third time. And we have got, look at the 4-hour chart, we've got these lower highs. So that looks ominous also. Diving into commodities, we'll take a quick look at gold. Obviously very driven by the dollar. which has turned around, found a little bit of support. So this moves a little bit under pressure. The band of resistance we had up at 1863 all the way up to 1875 has held, and price action back under pressure. Level to watch on the downside, 1828. For me, a break of there opens up the downside further, especially if we get strength in the dollar. Crude oil continues to move higher, and dips continue to be bought. Higher lows posted all the way along on this 4-hour chart. No real sign of this slowing down, and a break back above the 119 level on this chart should open up the upside. 126 is the next level of resistance before the all-time highs, which comes in at around 150. So that's pretty much coverage on my markets. Jamie, do you want to take the stocks away?
Yes, I will have a look at a few stocks. Let me put up my screen. There we go. Just having a look at some of the coins, but we'll jump into some stocks. Right. We'll start off with our biggest gainer and loser of the day. But actually, I want us to check in on yesterday's biggest loser, which was this RLYB. We had a little look at this. Weren't quite sure what happened. I think the CFO was stepping down. But this was down another 17% yesterday.
Wow.
So from, I think, about 30% the day before, another 17%. So rough 2 days of trading for people that like the look of this stock. I don't think there's much good to see here. Perhaps this is a bit of a support. I mean, it's really just an all-time low, so you can't really take too much from that. So, yeah, not so good. But we'll jump into today's ones. The biggest loser of yesterday was this PRAX, PRAX, which is Praxis Precision Medicines. Down 78%.
Wow,
so
that's pretty horrendous.
It's a pretty bad one. Yeah, closed on Friday at 852 and closed yesterday at 188. So yeah, pretty horrible stuff. We'll take a look at this. Let's have a look here. Praxis Medicines plummeted 75% after Wedbush downgraded the stock from neutral from outperforming and cut the price target from 4 to 4 from 34. Which is a pretty considerable price cut, isn't it? And
it's cheap.
Actually,
it's cheap now. Then at 188, if they're targeting 4.
Great value.
I'd rather someone else buy that rather than me.
Yeah, I was going to say probably not for me either. And you can see the huge volume spike we had yesterday at the bottom here. 35 million shares traded as opposed to the usual 2.21 million on average. So
potentially maybe an overreaction to the downside, but I don't know enough about it to comment any further, really. But it doesn't look great.
Yeah, certainly nothing from a technical perspective, but maybe people know a bit more about what's going on here. But yeah, pretty horrible day regardless. Looking at CISO now, Cerberus Cyber Sentimental Corporation, which was up 32%. This wasn't the biggest winner I saw yesterday, but what I wanted to actually have a little look at here, and sometimes I point these things out when I see them. I quite like this area here for me. Actually, we can tighten up this circle a bit and focus just on here. The range of these daily candles, it really did narrow up, which always suggests to me that perhaps there's a big move coming when price tightens up like this. I mean, if we got out some Bollinger Bands, which I don't think I've ever pulled up on a Talking Bull, but this will probably show the same story. So you can see the Bollinger Bands, which are these weird kind of blue things. They tighten up here. You can see the top side comes in, the bottom side comes in, and now they're expanding. And that can quite often happen after a tightening of the bands. They then do expand on the volatility after. So, yeah, an interesting move. This was up 32% in the end, so quite a nice day for anyone involved in Ciso. The volume was also up, so something to keep an eye on there. We'll jump in. Should we jump into a heat map? We probably should. I haven't got one pulled up. That's not great for me, but we'll quickly pull one up. So where do we find them? We go home.
Yeah, this is good training.
Yeah, here we go.
This is where you find the heat maps.
Yeah, there's the heat maps. I got the wrong one. We missed. Here we go. Heat maps. So actually, I did see the other day that TradingView have now like a stock screener and different screeners. So that's quite, I think, a recent addition, which is quite cool. Maybe we'll check that out sometime. But for now, we'll look at the stock heat map. You can see it was a bit of a mixed day, honestly, for the S&P. Google and Amazon almost up the exact same amount, 1.99%. Amazon had its stock split yesterday, which we'll go and check out in a sec, which is quite an interesting one. Tesla was up, Facebook was up. A bit of a mixed day. We'll check out. Let's have a look at the Nasdaq. So more focused on the tech stuff, and it was a bit of a mixed day looking at it, wasn't it? I mean, as you said when you looked at the indices, not really too much more to say. Some of the bigger names did quite well, and some of the smaller names were pulling it down a bit. So nothing too much standing out there for me. So we'll jump in. We'll start off with Amazon actually, and now if we looked at Amazon yesterday, it was trading at, what was it, 2,000 something, and now we're down to 124, and that's not because of a huge decline in price. It's a stock split, 20 to 1, in fact. So yeah, now these shares are perhaps more affordable if people like the look of Amazon. But what trading view has made me very sad about is that they've completely forgotten about all my chart annotations, which have been left up here.
Oh no,
they probably won't be seen anytime soon, so I've got to get rid of those and redo them. That's very upsetting. But no, Amazon had quite a nice day. You can see it gapped up from the previous day low, but did form this shooting star type candle here, which, I mean, we're not really at a key resistance. We're at a bit of a level of consolidation, but perhaps for the short term, there might be a bit of a pullback before a move higher. But yeah, no, it was quite, I mean, these stock splits are always quite interesting. Maybe we'll check out Shopify a bit later and see if that stock is still splitting before the split is officially meant to happen. Alibaba, we had this, it gapped up actually pretty nicely yesterday. It was up 6.2% and formed this shooting star type candle at a resistance. So that's a bit more negative for me. So we're a bit of a range here. We can kind of get rid of this now. Let's clear up the chart bit. We don't want too much messing it up. That's pretty much a simplified where we're at with Alibaba. You can see we've got a clear resistance here between this kind of 101, 102 level and the clear support about 80. So looking for a break either side of that and see how price interacts at those levels. What else have we got? I looked at Meta platforms, Facebook Meta platforms. Actually, it was a weekly chart that interested me. Again, we've got a bit of a tightening up of price from a weekly perspective here. A lot of indecision as well. This last kind of 5 weeks tells me. Two doji. We've got these aren't really dojis, these weekly closes here, but price is closing close to where it opened, which suggests to me that there is a little bit of a lack of direction in the markets at the moment for Meta platforms. Coming down to a daily, we had again another doji style candle yesterday. Yeah, I think right now there's nothing super clear about where this stock is going. It's a bit of a strange one. I mean, it's a bit of a tightening up. I want to see which way it breaks. Really, I've got the bias for the downside because of the trend we've had going into it. We've had this big gap down. But yeah, it's just, I thought it was quite interesting. Price is starting to tighten up, so perhaps there's a bigger move ahead for Meta platforms, but we'll have to wait and see on that. What else should we just quickly jump in on? GME, nothing too much to say there. Pretty low volume yesterday. Nothing really too crazy. What have we got here? I don't remember putting this. What are we doing? Get out of here. Yeah, inside day on Novavax. We noted the really big down day we had yesterday. It did finish stronger. It was up 6%, but I'm not still thrilled about where this stock is at. So I don't really care. A bit of a descending triangle. Descending, that's a very American way of saying I watch too much American football. You can see here we've got the top side of this descending triangle with the lower highs and the support holding up here at about 1220. So we'll perhaps be looking for a break on the downside. But a clearance of, let's just quickly draw on. I do talk for too long on these. A clearance of this level, we perhaps got a bit of a short-term double bottom playing out. So we'll see how price does react to this support level. We're there now. I'd want to see a pretty quick bounce. I always say I don't like to see price hang around at support levels. To me, that shows that the buyers don't really care about it, and perhaps the sellers can push through. Certainly, the bias is a break for the downside because of the trend we've had so far. It'd be a bit of a continuation. So, yeah, mixed day. I think we'll leave it there on stocks, but it was a bit of a mixed day yesterday.
yeah,
and yeah, I think perhaps we could see a bit more selling today, but we'll see where the day takes us.
I sort of agree with that. I think that potentially, well, I believe we're in a pretty decent midterm bear market, and I think there's a lot on the downside to flush out before we start to sort of like look at value stocks. I mean, you're showing us like some big companies who are struggling. And it's sort of like when it goes to such stock splits, you sort of think that's just a way of encouraging the retail traders to buy in, giving them a, they're able to own a whole share now. But I don't think it necessarily is a good thing.
No.
So yeah, it's a bit frightening. This is, you've never seen a bear market, Jamie, and a lot of people haven't seen a bear market before.
No.
They tend to be quite short, but very, very
Mhm.
aggressive. So
Sure.
yeah, we'll have to see. And obviously, with interest rates on the move higher, there'll be a lot of people looking around. Instead of investing back into stocks and shares, they can sort of like get a 3-4% return in bonds or gilts. Then that will look far more attractive because you
Yeah.
don't have as much risk with that.
Yeah, of course.
Yeah, so interesting. So let's jump on to the gun to head challenge. This is what we do every day. Each participant, which is today's myself and Jamie. Joe's out sunning himself, although he is working hard, I'm sure, in Cyprus at the Cyprus show. Each participant picks a trade live on video, which is Joe's word, that shows how old he is. Each idea must have a stop at a target. All ideas are placed at market. Trade ideas expire at 9 p.m. or when stop target is hit. And the performance spreadsheet link can be found in the notes. So, Jamie, have you got anything to? I'll offer you the option first. I feel like I'm going to go the same way as yesterday and look really ridiculous.
Yeah, no, you go for it. I've got to do a little bit more scanning, so you go for yours first.
Okay. Here's me looking at 10-year and things like that. Let's take a look at indices. I have to go somewhere there. I'm not sure which one. When I look at these, I always feel there's like there's an opportunity to sell. You normally get like a little bit of a bounce between now and the US Open. Even when the US come in, you seem to get a bit of an influx of bullish impetus before late night or late afternoon sellers come in to dominate the market. That's what it feels like at the moment. So I am actually struggling a little bit because they all look. I'm looking at this hourly chart here really, and trying to get some decent risk reward out of it. What about China? Now, if we look at China, that doesn't look too bad on the short-term chart. On the longer-term chart, we can see we've got this quite important upward trending support line, which we've broken down below. We've retested the trend line, and we can see we're at quite a key volume level, actually trading around there now. So obviously we've had a couple of positive days of price action, but there's a clear level to put a stop in up here. But it's just whether we get this move today. Again, this looks to me a little bit like some sort of bearish pennant or flag. So let's dive into the hourly chart, and we can be quite aggressive with this. We're trading at 13,833. I'm going to set my short at current levels and target a move back down to the swing low. So I'm getting about 4.5 to 1 risk reward. Let's tidy it up a bit. Uh, 4 to 1 risk reward on this trade idea. Going to sell China 50 at current levels 13,836, targeting a move to 13,136, and the stop is at 14,011. Maybe a little bit punchy to try and get that sort of return within the next 10 hours or however long we run this trade for. But I'd like to think that this previous level of resistance may cap gains now. So that's me. Jamie, how about you? Have you got anything?
Yeah, I'm ready to go. And this is what I call a passion play. I'm looking at the exact same trade I did yesterday. It stopped out yesterday. But today I've got a better feeling about it based on mainly passion, but there are other reasons. I'm selling the DAX today. But what I'm looking at here is actually the MACD, which again, we don't look at too much, but you can see we've actually got a bit of a, the words completely slipped out of my head. Bit of a divergence here. You can see, so the chart's making a new high up at this point here. That's where I got stopped out yesterday. But the MACD is not making new high. You can see on this kind of period here, this green bit is much higher than this green bit here. That's putting it very simply. But that means to me that the bulls are slowing down, momentum is stalling, and this is still a pretty key level, as we can see if we zoom out here. So I'm hoping that yesterday's break above it was a bit of a false breakout, and that we will see a bit of a move lower today. And it would also mean I beat the DAX, which I am trying to do. So we're going to look to sell the DAX here at current price, which is 14,546. Let me just change that number there. That's how many go up my risk reward. Selling at 14,546. These are too many numbers. We're going to take profit at 14,290, and our stop is going to be just above this consolidation here at 14,644, which gives us a 2.61 risk reward. Looking to sell the DAX. Look at it's moving lower. I've got a good feeling about this. Here we go. Shorting DAX, hoping for a move lower today.
Lovely, nice one. Okay, we'll finish off now. Just really sort of talking about what we're expecting today. 1:30, we've got US trade balance and key events. This week are June the 9th, ECB policy meeting, June the 10th, US consumer prices, June the 10th, Canadian employment report, again, which I thought was out last week. We just had a young person on TradingView just asking a question. Gun to head challenge. This is what we do. It's a bit of fun. Please understand that. We'll sort of like rephrase gun to head challenge. It's not really a nice thing to sort of talk about, but it's almost like a gun to head challenge is almost like you're forced to make a trade live on air. That is for us, it's really not planning too much, just reacting to the analysis that we've like looked through and trying to get a good risk reward trade idea. So we have to enter a stop and target. All ideas are placed at market, which is not ideal. Obviously, planning your trade is really important. And the trades expire at 9 p.m. today, UK time, or when the stop target is hit. So we monitor these. We'll show you next week where there is a link somewhere in the show notes, but Joe's the expert on that spreadsheet. So really important for us to show you. It was actually started to show you how difficult it is to trade without actually planning, but it's worked out quite well. So that's it. Have a little, I quite like the name as well, but sort of like get pressure to change it sometimes. Anyway, thanks for joining us. Thanks for interacting. We go out live on YouTube, TradingView, and it's always good to get feedback and questions thrown at us. So thanks for that. And look forward to joining us or joining you again tomorrow. Thanks very much.
Thanks, guys.